Good afternoon. This is Chris Brecher with the Simpler Stocks free video for February 18th, 2016. As you see here, it's about 5 minutes after the bell. Today was all about the measuring gap from yesterday and it continuing to go up. So what did we get today? We have the ES is up 34.50. We have the NASDAQ up 103. The Russell up 17. You have the Dow up another 283. So over 3 days, it's up almost 800 or 900 points. Now, the key in here is the Nikkei up 110, and I'll get to that in a second. So basically what we saw today, and I mentioned this on the premium side and on the free side yesterday, was this gap right here. Check out the 78-minute chart. So what does this exactly measure? Because I did it sort of roundabout. What I want you to do in here is take this down here and take this grid. Go down to right here, 1806. Right there, 1806. And then go to 1860. So what is that? That's 64 points, 54 points. Then take the low right here, which is 1865, and add 54 points to it. And what do you get? You get 1920. Look where we closed, 1920. So this exactly went to the measuring gap. A lot of people ask me, what is a measuring gap? Let me put this on a closer perspective so you can get an idea of what I'm talking about in here. That's a measuring gap right here. And what it does is when you get that hole in there, it usually goes up by the previous move. You get all these fake outs and all that, but it eventually goes by the previous move. It's fascinating how that works. And it works a lot more often than you think. Now, the interesting thing that you get now with the ESs is you see the squeeze on here on a daily. Now, a lot of people are saying this is about to squeeze to the upside. This is my problem with that. Number one, we're getting overbought. Number two, we've already done the measuring gap. And number three, I don't like to use the squeeze unless I can use it in conjunction with other chart patterns. Like I said, we're getting overbought. We're hitting resistance right at this Doji back here. And let me zoom in so you can see. This Doji has proved really daunting. All these times it's bounced off of and came right down. We're going to have now Doji resistance, so to speak, with you starting to get overbought, with these moving averages all still pointing down. So I'm a little cautious. Let me contrast that with what a squeeze looks like on a that you can also combine a chart. Look at the bonds on here and put the bonds on a daily chart and look at this right here. I think of a squeeze as a contraction in volatility. Over here, I don't exactly see the contraction like everybody else sees. But notice that this squeeze accompanying a triangle, beautiful pattern. So the minute this broke out, it squeeze released to the upside, but you were able to combine the squeeze with the chart pattern. On the left, I'm having a problem trying to combine whatever this is with a squeeze. So just because it squeezes is not enough reason for me to respect the move yet. So that's where I am on this. There's another thing in here that I find real interesting. This happened intraday, and if this would have happened a month ago, even a week ago, the market would have absolutely got hammered on this. It's basically the Japan finance minister came out and said that they're not going to do any more stimulus. Check out what the yen did. Literally in 2 hours, went from 114.2 to 113.8. That's actually a big move. That means the yen went up by this much. If you're wondering how this worked, this means it takes less yen to buy a dollar. So that's why it looks inverted. Usually, like you see on the left, usually you would see the USD, this go down, and then this go down. But this time it didn't do it yet. And so there are a couple of things I'm looking. If this stays down overnight, I'm thinking this pattern on the left, see how many times it's touching, becomes a little bit of a head and shoulders top. Not a huge one, but a little one. And that would get you down to this support around 1910. Don't forget, we've done the measuring gap. We're getting overbought. Plus now you have the yen. You have a number of reasons why we could go down. Like you know, there were a lot of people short, so it's caught a lot of people. I'm just showing you what might happen. Now, the other thing I saw in here, and this is going to be the headline, the title for actually this free video, is it's the day of the Doji. And let me show you what I mean by this. Notice a lot of times after a big up move like this, Like you see the ES is here with this big up move. There are certain stocks that fail to participate, and they become Doji candidates. Check out JP Morgan in here. Check out Citigroup. Check out Lowe's. Unbelievable how many of these had dojis. Now, that doesn't mean that you're going to go down from there, but you're getting overbought against resistance with a doji. It's just a warning signal. It always depends on the next day. If we gap down in here on the lows of the world, that means this doji was successful, and this could then resume a downtrend. Same thing, you could go one through the next. Not Facebook. Not a lot of these NASDAQ stocks didn't have that. I'm talking about more like the bank stocks. Look at Goldman Sachs, JP Morgan. How about IBM? I don't think so. IBM's been one of those real laggards, has a buyback in place that they've been actively buying back their stock, and the stock acted great. All I'm saying is there are a number of the stocks I watch that are forming some kind of dojis. And I'm going to be watching that closely the next 2 days. There's Tripadvisor did one. Notice another thing about Tripadvisor. Now, this one had good earnings, had a doji, and then resumed going up the next day. Was right at the body. Now you have another doji, but you're getting ridiculously overbought. Now you understand why Tripadvisor didn't go up today. The odds are when it's right at its ATR trailing stop and under the 49, and it's this overbought, the odds are against buying that one, and it's going to continue up. And like you know, I try to go on probabilities. And when I see something that overbought, I just don't go for it. Now, the thing is, if you get this on a 78-minute on something like Tripadvisor, where it can now sort of form a bull flag and it can work off this overbought, well, that's different. But like you see, even on the right here, you have to be real careful about this negative divergence and at that overbought. So on the premium side, we're going to talk a little more in depth about the individual stocks. I'm going to show what I think of the Nikkei. I'm going to show a little bit of unusual option activity and seeing if any of it applied to what happened after the close today. We're also going to do a scan of the Russell 2000 stocks because the Russell has underperformed the whole market, and look for stocks within that that could still have a ways to go on the upside. So I hope everybody has a great night. I will talk to you tomorrow.